Hey everyone, welcome back to another Marathon Digital Holdings stock chart planning video. On this one, I'm going to break down two specific bullish patterns I'm seeing so we can better understand which one can work out, or at least keep track of both of them to see which one of the two are working out the most, so we can better, like I said, understand the chart and also put in our trades and manage our trades a lot better as well. So as we get into this Marathon Digital Holdings stock here, Mara, as you can see, we did recover upwards nicely from a previous downtrend, and we're currently focused on making or making progress into new highs in this 2024 bull market cycle as we enter 2025 as well. But one thing I really want to make clear in is what the wave structures are at the moment. So in my eyes, I have enough evidence on here that a second overall wave has begun. So if you guys take a look, we had this smaller one wave which goes up into here, and we're currently in this second wave. So in order to break this down, we can see that every bullish wave on the overall bullish wave patterns have a 5 wave move up, and I usually like to focus on 3 wave corrective moves. So on this first wave, we have a 1, 2, 3, 4, 5 wave count in yellow, completing this overall 1 wave right here. So in that case, I'm going to just go ahead and uh, try to remove this yellow count because that first wave is complete, making this blue count the 1 wave. We're currently on a 3 wave correction. At least that's what I'm looking at right now in the first scenario to reach this second wave right here. Once we finish the second wave, that's what I'm looking at, this third wave coming up. I'm not going to worry too much about the third wave and then especially the fourth wave, because until the second wave is done, I'm not going to plan out the third wave. So this third wave, I'm going to create more Fibonacci extension lines to better understand where the third wave can be once we begin it. As of right now, in my eyes, we're still working on this second wave, as you can see here, down here. So in order to break down this second wave, of course, as of right now, we see as you can see right here, a first wave down as the form of an A wave, and then the second wave will be a B wave, and the third wave corrective move will finish in the third wave, as of right now at least. And the reason I say that is because this is a very shallow, you can't really count, this as a 1, 2, 3 wave count, although you could, but due to the shallowness and how quick this played out, although second waves tend to play out fairly quick, I would like to see this show a little bit more of an aggressive correction on this second wave. So I was counting this as a W down here X or WYX pattern, or did I say that right? WYX, something like that. Either way, I want to I remove that because I'm not feeling that wave count anymore. It doesn't look clear due to this choppiness and this very weak push into the upside. I just remove that from the chart. I want to focus on an overall more conservative wave count because I really like to focus on creating not just myself, but hopefully influence other people to be more cautious traders. We don't want to just jump into anything, jump into any hype, and be super quick in the market. We want to be very cautious and make sure we enter in trades or average it into a trade, or place or manage our trades a lot more. You know, I don't think professionally is the right word, but just more cautious. We want to make sure we're doing this properly because we're we're here to really, be successful traders, and we're not here to just make all these random, super hyped up moves or anything like that. So we want to be very conservative but aggressive at the same time as we are disciplined. So I'm considering this as of right now, and I did post about this yesterday on Instagram and Twitter or X. So if there's links down below in the description for my social medias. If you guys follow me on there, I update charts. I do updates a lot more frequently than I do on YouTube. So I'm looking at this first wave down as an A, possibly a B, and a C. Although to confirm these a little bit more, we are focused on making sure that we don't break previous highs or lows, which can invalidate our current wave count. So as of right now, we want these. We're currently holding at this area right up here. We're gonna make that. We'll make it yellow. We're currently holding there, but we want to see it reach and hold this level up here. So then we can go ahead and reach these green Fibonacci extension levels, which ideally we can just see a quick corrective down into the C wave, into these red areas down here. And then from there we can start making new highs and start finding what our third wave top will be. But until then, I really want to see a more organized and just more clear, more organized corrective wave structure right here for the second wave, because although the second wave could be in, potentially this second wave could have bottomed out right here. But due to the shallowness of it, or at least how quickly we recovered from it, but we're not making new highs right away. Like if we were somewhere already by the swing high, I will consider the second wave to be done. But until we make a new high above this area right here, and then hold it, I won't consider the second wave done just yet. So if we do go into this B wave mark right here, hold it, and then, fall back down to the bottom of this wave or this Fibonacci extension on the 100% extension level and bounce up from there, that'll be some confirmation that we are at least moving higher in the third wave count. We can start looking at what that can be. Until then, though, I'm looking at a more extensive 3-wave correction, and then we can bottom out the second wave somewhere around here. But like I said, until we make that new high, hold and then bounce higher, until then, this is still valid, and that can invalidate this, and we can move higher. But of course, there's also the possibility of us being in a triangle pattern. Rather, that can be like that, or it can be like this. So we can potentially see this roll out sort of like this, and then move on higher into the third wave. So there's two scenarios right here, rather it's a more, because although it's still possible that the 3-wave correction was already completed, I'm not seeing that. At least, I convinced myself that that's not what I'm personally looking for, because this is all my opinion. This is how I structure my trades for this stock specifically. But I kind of wrote out the possibility of that of being likely and more of an unlikely scenario. I see this going up higher into the 1.236 extension and then falling back down to finish off the second wave in this area, and then from there move up higher. And then the second possibility would be just a more continued triangle corrective pattern, and then you move higher from there. That's more what I'm focusing on both of these, and what's going to invalidate both of these paths and make it a more or invalidate all of these, and we can start seeing the third wave sooner rather than later, would be this continuing higher holding around that 1.236 extension, around $23.25. Not breaking back down into the range, and then instead just breaking higher. That can make the third wave come out sooner rather than later. But like I said, I'm looking for these two scenarios ideally to form a more clear and organized wave structure for this overall second wave that we're currently working on. So hopefully this made sense. I hope some of you at least understood what I'm trying to say. And again, social media is down below. I appreciate a follow and a like and subscribe as well. And I'll see you guys on the next chart planning update video.